Imagine a company that took on one of the biggest coffee giants in the world, Starbucks, and quickly became the most talked about startup in China. That's the story of Luckin Coffee. But this isn't just a tale of rapid success. It's one of scandal, financial mismanagement, and a remarkable comeback that's making headlines again today. How did Luckin Coffee rise to power, collapse in disgrace, and then stage an epic recovery? Let's dive into the incredible journey of Luckin Coffee, the meteoric rise of Luckin Coffee. Founded in 2017 by Jenny Qianjia and Charles Zhengyao Lu, Luckin Coffee entered the market with one goal in mind: to disrupt the coffee culture in China. At the time, Starbucks was dominating China's coffee market, but Luckin had a different approach. Rather than creating large, cozy coffee shops like Starbucks, Luckin focused on small, digitally powered stores that encouraged customers to order their coffee online through a mobile app for quick pickup or delivery. Luckin Coffee became synonymous with convenience. Their business model revolved around tech-driven efficiency, heavily utilizing data analytics and customer behavior insights to optimize store locations and inventory management. Luckin's rapid expansion was also fueled by offering discounted prices and free drinks to lure customers away from Starbucks. By 2019, Luckin had opened over 4,500 stores, surpassing Starbucks in terms of store count in China. Luckin's brand quickly resonated with China's young, tech-savvy population, particularly in urban areas where speed, convenience, and mobile transactions were the norm. The company aggressively marketed itself as the more affordable and convenient option, leveraging China's massive e-commerce and delivery infrastructure to reach as many customers as possible. Their growth was meteoric. In 2019, just 2 years after being founded, Luckin went public on the NASDAQ, raising over $600 million in its initial public offering, IPO. This level of success made headlines worldwide, and many analysts believed that Luckin Coffee could become a serious contender to challenge Starbucks' dominance in China and possibly expand globally. The financial scandal and the fall of Luckin Coffee. Just as Luckin was riding high, the company came crashing down in 2020 in one of the biggest corporate scandals of the decade. In April 2020, Luckin Coffee admitted that it had fabricated over $300 million in sales data. This revelation shocked investors, customers, and the broader financial community. The fraudulent activity was traced back to 2019, the year Luckin went public. The company's management had falsified transactions to make its financial performance look far better than it actually was. Internal investigations revealed that employees had created fake invoices and transactions to inflate sales figures and mislead investors about the company's true profitability. The scandal had immediate consequences. The company's stock price plummeted by over 80%, wiping out billions in market value. By June 2020, Luckin was delisted from the NASDAQ, and the company's CEO, Jenny Qian, and other senior executives were fired. The Chinese government also stepped in, imposing fines on the company and its executives for misleading the public and committing financial fraud. Investors who had placed significant faith and money in Luckin Coffee were outraged. Several class action lawsuits were filed against the company, and international investors lost substantial sums. The situation was a massive blow to China's corporate reputation on the global stage, raising concerns about accounting transparency in Chinese companies listed on U.S. stock exchanges. The aftermath and struggle for survival. After being delisted and hit with multiple lawsuits, many believed that Luckin Coffee's fate was sealed. However, the company didn't disappear entirely. Instead of filing for bankruptcy and dissolving, Luckin embarked on a process of corporate restructuring aimed at salvaging the business. The company filed for Chapter 15 bankruptcy protection in the U.S. in early 2021 to help restructure its debts and negotiate settlements with creditors. This filing gave the company breathing room to reorganize without facing complete liquidation. Behind the scenes, Luckin replaced its management team, overhauled its internal controls, and began to slowly regain the trust of customers and investors. The Chinese coffee market remained a significant opportunity, and despite the scandal, many customers continued to enjoy Luckin's products. The company doubled down on its digital-first strategy, continuing to operate its app-based ordering system and expanding its product offerings to include new coffee blends and snacks. Luckin also shifted its focus toward franchising, which helped it maintain a presence in key markets while reducing operational costs. Luckin's ability to survive its financial scandal is also due in part to the enduring demand for coffee in China. Even after the scandal broke, coffee consumption continued to rise among young urban Chinese consumers. With its massive customer base and digital infrastructure still intact, Luckin was able to stay afloat during its restructuring phase. The remarkable comeback. In 2021 and beyond, Luckin Coffee began to stage an unexpected comeback. The company's focus on operational efficiency, combined with new management, allowed it to stabilize and eventually return to growth. The COVID-19 pandemic also played a role, as consumers increasingly turned to delivery and mobile orders, which played directly into Luckin's tech-savvy approach. By late 2022, Luckin Coffee was reporting profitable quarters, something that seemed impossible during the height of the scandal. The company revamped its product lines, introducing new seasonal beverages, promoting healthier drink options, and using creative marketing strategies to rebuild its brand. Luckin's focus on innovation also helped its resurgence. The company continued to invest in automation, artificial intelligence, and data analytics to optimize its supply chain, manage inventory, and improve the customer experience. These tech-forward solutions allowed Luckin to maintain its edge in the highly competitive Chinese coffee market. In 2023, Luckin Coffee achieved a significant milestone. The company reported record sales and returned to profitability. With more than 6,000 stores across China, Luckin surpassed Starbucks once again in terms of store count, cementing its position as a leader in China's coffee market. What's next for Luckin Coffee? As of 2024, Luckin Coffee's story is one of resilience and reinvention. The company's comeback after a massive scandal shows how a brand can recover through strategic leadership, innovation, and a deep understanding of its market. But the road ahead remains challenging. Although Luckin has regained profitability, it still faces significant competition from Starbucks and other emerging coffee brands in China. The company must also continue to work on rebuilding its reputation globally as international investors remain wary of its financial past. Luckin's future growth will likely depend on its ability to expand internationally and diversify its product offerings. Although it has not yet aggressively pursued expansion outside China, Luckin could capitalize on its digital-first approach and efficient business model to enter new markets in Asia, Europe, or North America. Furthermore, the company is increasingly focused on sustainability and corporate governance, areas that will be critical for long-term success in an increasingly conscious market. If you found this story of Luckin Coffee's turbulent journey interesting, be sure to like, comment, and subscribe to our channel for more deep dives into the stories behind some of the world's most fascinating businesses. And let us know in the comments, do you think Luckin will continue its comeback, or will it face more challenges in the future?